Hello, and thanks for joining us for the May edition of our Markets at a Glance update. Uncertainty in the markets continued during May, with inflation still high, the Federal Reserve's policy tightening, and slowing economic growth. The S&P 500 briefly dipped into bear market territory in late May, but ultimately ended the month with a gain of 0.2%. At the May policy meeting, the Fed raised rates by a half percentage point, its most aggressive increase in over 20 years. There will likely be 2 more half percentage point raises in June and July. The Fed also announced that it will gradually reduce $9 trillion of assets held on its balance sheet beginning in June. Investors are watching closely as this aggressive Fed action could adversely affect economic growth. Inflation has dropped slightly from its peak in March, but remains high at 8.3% at the end of April. Let's take a closer look at this in our chart of the month. You can see here that since the start of the pandemic, consumer price index inflation has increased in most advanced economies. While Europe has experienced substantial inflation in the past few months due to the war in Ukraine, the U.S. is still experiencing the highest rates. While controlling inflation is the primary role of the Fed, the administration is working to lower gas prices and improve supply chains. As the Fed responds with higher rates, some data suggests that inflation may have peaked, but the pace at which inflation is slowing remains uncertain. The war in Ukraine continues to put pressure on food and oil prices, and the recent COVID lockdown in Shanghai adds complication to supply chain issues. To read more about this news and to see how it affected our fund performance for May, please check out our latest monthly investment report.